This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Stocks stall. The staggering run higher is quickly losing steam, and there are reasons why things could start to get rocky.
Talk too much? A number of Fed officials are speaking this week. Will that bring clarity to investors or just confuse things more?
New promise, an experimental drug for more effective migraine prevention, just took a big step forward. All that and more tonight on Nightly Business Report for Monday, March 28th.
Good evening, everyone, and welcome. Well, the recent rally in stocks appears to have stalled. Those double-digit gains since the mid-February lows have taken a bit of a breather, and that shift in the market coincides with the winding down of the first quarter. It also comes against the backdrop of several major speeches by Federal Reserve officials this week, and on Friday, the government's always important employment report. And, oh yeah, there are still those pesky headwinds bedeviling stocks. Oil prices, recession worries, political risks, and more. As Dominic Chu reports, the path forward for equities could be rocky.
Overall, the stock market's given people a roller coaster ride for the first few months of the year. And now that we're trying to close the books on the first quarter, we've seen a lot of different warning signs come up. Remember, markets got off to one of their worst starts in history for the U.S. stock market, and then have rebounded a lot since then. So let's take a look at some of the reasons why some traders and some investors are a little bit worried about what's going to happen in the coming months. Now, there are way too many to put on our wall behind us here, but I want to show you a few of them that are getting a lot of attention. First of all, on the currency side of things, it's not something we often talk about, but corporations will be talking about the strength of the U.S. dollar. That could be a big theme in earnings season. Remember, we're less than a month away from earnings season coming up. So the strong dollar, and remember, the strong dollar is important because for a lot of these multinational companies, it's a lot more expensive for them to bring profits back home when the dollar is strong. Something to keep an eye on. Also, with regard to the currency markets, the commodity markets are a big focus as well, specifically what's happening now with the price of oil. We've seen a sharp move higher off those lows, but now maybe a little bit of weakness creeping back in there. Oil prices and the energy complex were a huge drag on earnings and sales for S&P 500 companies in the past year. We'll see if that continues, perhaps a warning sign there. Then you've got the IPO market. Initial public offerings have not been active. There haven't been a whole bunch of them. Does that signal that perhaps there's not enough risk appetite, not enough of an environment conducive to bringing your company public? That could be a warning sign as well. Then you talk about the banks, the financial stocks. They're important because they're the second biggest sector in the S&P 500, and they've been one of the biggest laggards so far in the market. When the banks don't perform, there's a question about whether the whole market can, again, without the banks. And then one last one to consider, transportation stocks. You think shippers like UPS and FedEx, railroad companies, trucking companies, they move goods. So if we have seen a bit of a run there and weakness perhaps settling in for transportation stocks, maybe that could be a bad sign for the overall stock market and economies here. But again, just some warning signs to keep an eye on. Nobody really knows whether the market's going to head up or down, but they are watching very closely some of these factors to see if they could lead perhaps to some more caution down the line. For Nightly Business Report, I'm Dominic Chu.
Well, today, stocks were mostly higher on low volume as investors sorted through new economic data and awaited comments from Fed policymakers this week. We'll have more on that in just a moment. Traders were also watching the chaos at the Capitol building. This afternoon, police shot and wounded a suspected gunman in the visitors center. The lockdown was soon lifted and the suspect is in custody. By the closing bell, the Dow Jones Industrial Average rose 19 points to 17,535. The Nasdaq lost 6. The S&P 500 added 1.
And more now, Sue, on all that Fed speak this week. There's a chance it may overshadow the monthly employment report due out Friday. That's because several Fed policymakers last week indicated that a rate hike in April would be appropriate. A view at odds with the guidance given recently by Fed Chair Janet Yellen. And we'll hear from her tomorrow when she speaks on the economy and takes questions in New York City. Wednesday, it's Chicago Fed President Charles Evans' turn. Thursday, New York Fed President Bill Dudley will speak, and on Friday we will hear from Cleveland's Loretta Mester.
But do central bank policymakers speak too much? They do it in the name of transparency, but does it only cause confusion and make investing decisions more difficult? Bill Struzzulo is the chief market strategist with Bell Curve Trading. Bill, I've known you for years. Sorry, I botched your name. Good to see you, though.
That's okay, Sue. Good to see you.
Let's start, first of all, I think you would agree that maybe some of the central bankers are speaking a little bit too much.
Yeah, it's like the pendulum has totally swung here. And I know both Tyler and you remember the days back in the 70s, 80s, early 90s when sometimes you didn't know for days whether the Fed had actually eased or tightened. And now the pendulum swung the other way, and it seems like you can't shut these people up. And so the question is, for an investor or a trader, how do you deal with that? And what we advise our clients is really just try to focus on the markets. That gives you a much better sense of, what's actually going to happen down the road. For instance, if you look at the front end of the U.S. yield curve, 2-year notes, Treasury bills, Eurodollar futures, they never priced in all these tightenings that the Fed was just talking about a month or two ago. They basically priced in 1 or 2 tightenings. So if you focus on the market indicators, I think you can block out a lot of the noise and you're in much better shape.
So watch what the market does, not what the Fed governors say. How much transparency do you think would be ideal? I mean, obviously these folks get invited to go to conferences or they get invited to come on television and talk. We love to have them. But sometimes a stray comment can kneecap the market. How much is the right sort of Goldilocks scenario here?
Yeah, well, I think it's a good question, Tyler. I think it's a mix not only of how much, but who. I mean, I think, having all these people go out and speak, every several days is too much. It's probably, around the time of the meeting to have the chairman or chairwoman speak. That's appropriate. And, maybe it's something, monthly or something like that. But I think where you have all these Fed governors out speaking, sometimes almost day in and day out,
yes,
and sometimes contradicting each other. It's just too much. The bottom line is that almost always the Fed follows the market. So that's the important point to keep in mind, is that you look at what's going on now. The market had no more than 1 or 2 tightenings priced in. Follow the market because the Fed follows the market.
But is this market that we all should follow going to be increasingly volatile if indeed we keep getting, in some cases, contradictory comments from the Fed presidents?
Right. Yeah, that's a good question, Sue. I mean, the Fed, in my opinion, when it comes to volatility, they're kind of the 800-pound gorilla in the room, whether it's their comments, their speeches, or zero interest rate policy and quantitative easing. They're the ones that really kind of determine what happens there. Look, you got to kind of, in my mind, Sue, you've got to, do your homework, have your investment thesis, kind of appropriately map out your risk and reward, and then you've got to kind of stick to it. If you're reacting to every Fed statement or every press conference, you're never going to make any money. I mean, follow the market and stick to your game plan.
On that note, Bill, thanks so much for joining us tonight. We appreciate it. Bill Struzzulo with Bell Curve Trading.
Consumer spending, an important part of economic activity, of course, rose just fractionally in February. It's according to the Commerce Department. It edged up 0.1%. That's the 3rd straight month of scant gains in personal incomes. Well, they weren't much stronger either. They saw a modest 0.2% rise last month.
But pending home sales were strong. The number of existing homes that went under contract in February rose by 3.5%. That's the highest level seen in 7 months and better than estimates. Pending sales offer clues as to upcoming activity, and the experts say this report is encouraging.
Oil prices settled just under $40 a barrel today, while $40 still historically low by recent history. It is higher than where prices stood just a few weeks ago, and the recent rise is pegged on hopes that something will come of a meeting of oil producers scheduled to be held in April. But as Jackie DeAngelis reports, those hopes may be fleeting.
Oil prices have risen 20% in the last month on the hopes that a producer meeting in the Middle East on April 17th will bring an accord about a production freeze. It's not an emergency OPEC meeting. In fact, the next meeting of the cartel will be in June, but it's a meeting of global producers. So who's coming and will it matter?
I don't think any kind of a meeting with OPEC and those producers will boost prices any farther than where they've gone right now. They've managed to jawbone the market a little bit higher, but there's going to need to be a production cut. And when you have a meeting without the U.S., which is the third largest producer of crude oil in the world, I don't see how they can achieve their goals.
The guest list, some OPEC members have opted out, like Libya and Iran. And with the resignation of the Iraqi oil minister last week, it's unclear if that country is going to have a delegate. Of the non-OPEC producers, Russia and the United States, they're the largest. The Russians have been encouraging a freeze, but the United States hasn't said anything about sending a representative to this meeting. With all the parties not coming to the table, the market seems skeptical of an accord taking place here. It would be easier to achieve consensus if all the parties got together. With oil trading under $40 now, it's possible we can see another leg lower, but not necessarily as drastic as the 20s, more realistically like in the upper 30s. For Nightly Business Report, I'm Jackie DeAngelis.
Still ahead, the hotel battle heats up, but could the fight for Starwood raise the eyebrows of regulators?
A report late tonight that the White House is expected to withdraw its California legal action against Apple. That report, according to USA Today, which cited a government official. The government had asked to delay a hearing last week when the FBI said it was working with a third party to gain access to an iPhone used by one of the San Bernardino shooters. Eamon Javers has been following the story for us for weeks. Eamon, what do you make of this report, and does it suggest that the FBI, the Justice Department, has cracked into that phone?
Well, it does suggest that there might be progress here behind the scenes, Tyler. We'd been expecting some update from the Department of Justice on this case by early April. They said that they had been told by an unnamed third party that there might be another solution to get into Saeed Farouk, the San Bernardino shooter's iPhone, without the help of Apple itself. They had initially said that was the only way in, and they demanded that Apple help them. Now they said last week that they thought maybe they could do it without Apple's help. The fact that we're seeing this news tonight is an indication that maybe behind the scenes there is some progress on getting into that phone, or the FBI has figured out another solution entirely. We'll have to wait and see when the government briefs us in more detail, but it may be an indication that this tension point between the U.S. government and Apple, one of the most prominent, if not the most prominent companies in the United States, may be easing a little bit now, and they may be able to get back to regular business here. There have been very personal and very intense conversations between the Department of Justice and Apple over the past couple of weeks on this.
Yeah, Eamon, stay with us because there's another story that you've been following, and we want to talk to you about China's Anbang raising its offer for Starwood hotels to about $14 billion. That acquisition by Anbang would be the largest ever by a Chinese company in the U.S., and it threatens Marriott's offer for the hotel chain. Shares of both Starwood and Marriott rose on the news. In a statement, Marriott said it is committed to completing its deal with Starwood, and it also raised the issue of potential regulatory hurdles that an Anbang deal may need to overcome. So, Eamon, what do you make of this story, and what could those regulatory concerns be?
I think what they're talking about in that statement there, Sue, is an entity here in Washington that most people have never heard of called CFIUS. It's the Committee on Foreign Investment in the United States. It's a multi-jurisdictional committee that reviews large transactions when overseas entities want to buy American companies, and they look at it through a national security lens. They want to make sure that this is an okay thing for that foreign entity to buy. And I've been talking to some experts on the CFIUS process here in Washington today about exactly what they might look at in this potential acquisition of Starwood. And they're telling me a couple things here will be on the eyes of regulators. One is proximity to sensitive locations. That is, how close are Starwood hotels to sensitive installations in the United States that the government might want to protect, particularly the W Hotel on 15th Street Northwest here in Washington, D.C., which overlooks the White House. That might be one they'll pay some close attention to. Also, protection of customer data. How many email addresses and credit card numbers would the buyer be getting of Americans and people around around the world, and how will that data be handled will be something that CFIUS will want to really understand. And they're also going to look at the protection of Wi-Fi and communications networks within the hotels. They'll want to know, does the U.S. government have perhaps a deal with this hotel chain in order to have government events there and government officials staying there? If they are, how will their communications inside that hotel be protected if it's being bought by a foreign entity? All of that is likely to be in the mix as they review this, but the question is whether the government will let it proceed or not, or force them to divest certain assets, or how they'll go forward with this altogether.
All right, Eamon, we have to leave it there. Thank you so much. Eamon Javers in Washington.
Well, the outgoing chief of Valiant Pharmaceuticals has been subpoenaed to testify at a Senate hearing. The committee says Michael Pearson is among several witnesses scheduled to appear on April 27th. The panel looks into the impact of drug price increases on the healthcare system, including patients, insurers, and medical providers. Last week, Pearson said he would step down as Valiant deals with a number of federal investigations into its accounting practices.
Positive news for the millions of Americans who suffer from migraines. A new injection that prevents debilitating headaches met the main goal of a mid-stage study. Alder Pharmaceuticals, which makes the drug, saw its shares soar nearly 50%. As Meg Terrell reports, Alder is competing with some bigger rivals to get this new class of drugs to market.
It's a problem more than 30 million Americans are all too familiar with. Migraine headaches are not only painful, but can be debilitating. And current options leave a lot of room for improvement.
Well, the problem with migraine has always been the drugs that we had were always pretty mediocre.
A new group of drugs in development brings hope that may soon change. Called CGRP antibodies, the medicines are aimed to prevent migraines before they happen. They're still in testing, but have shown they may produce better results than current therapies. They're in development at drug giants Eli Lilly, Amgen, and Teva, as well as smaller competitor Alder Biopharmaceuticals. It was new data today from Alder that's giving support to the whole class, according to analysts. The study results drove shares of the small Washington state-based biotech company up as much as 50%. The drug was tested in patients with chronic migraine, defined as at least 15 days with headache per month, 8 of those considered migraines. With one intravenous infusion, the medicine reduced migraine days per month by at least 75% for more than a third of patients on the 2 highest doses tested, meeting the study's goals. That compared with just more than 20% of patients taking placebo who reported a 75% reduction. The drug was tested for 12 weeks. It's now expected to go through another stage of testing before it may hit the market. Sanford C. Bernstein analyst Ronnie Gao says each of the 4 drugs in development is essentially neck and neck, with potential approval in 2018. He estimates there are about 11 million patients in the U.S. with chronic or episodic migraine.
The question really is how many of them will end up on the drug and how much will those drug cost per patient per year. We are right now running a numbers of between $5 and $6 billion for the market in total.
That assumes multiple medicines make it to market and are priced around $10,000 a year per patient, Gal said. One thing that may set Alder apart, its drug can be administered just once every 3 months versus potentially once a month for competitors. These drugs are all given by injection, either through an IV or a self-administered shot. And so far, their safety, according to analysts, looks good, though results of the larger clinical studies are needed to confirm. For Nightly Business Report, I'm Meg Terrell.
Avon comes calling and appeases activists as it does, and that is where we begin tonight's Market Focus. In an effort to avoid a proxy fight, Avon will allow 2 activist investor groups to appoint an independent director to the cosmetic company's board. The private equity firm Cerberus Capital, which now owns Avon's North American operations, will also take part in selecting the nominee. Shares of Avon up more than 8% to $4.64. Cal-Maine Foods saw its profit climb 26% in its latest quarter, thanks to higher egg prices, and that helped its results beat the street estimates. The fresh egg producer did, however, miss on revenue targets. Shares were up nearly 9% to $54.51.
Shares of Pandora fell today on the news the founder of the music streaming service is coming home. Tim Westergren will return as the company's CEO. He previously held the role from 2002 to 2004. Shares fell 12% to $9.60. A former executive at investment bank PJT Partners has been arrested after allegedly attempting to swindle $95 million from investors. Over the weekend, Andrew Casperson was charged with securities fraud and wire fraud. PJT has fired Casperson for cause and has initiated an internal investigation. Shares of PJT Partners fell more than 10% to $23.66.
Facebook is no longer just about status updates and likes. Now it's game on for the social media company, which today started shipping its high-end virtual reality headset, which is expected to be a big player in the fast-growing virtual reality device market. Julia Borston has the story.
Facebook's Oculus Rift is on sale for $600, launching with 30 games and hundreds of thousands of 360-degree movies and photos and other immersive experiences in the Oculus App Store. Like this Farlands virtual world Oculus created to showcase the creative possibilities. These new types of content expected to be what drives purchases of the headsets.
We're waiting a bit to see what the killer app is on Oculus, whether it's a Facebook app itself or perhaps a game or experience we haven't imagined yet.
While there are already less expensive devices, including Google's Cardboard and Samsung's Gear VR, today kicks off a competitive high-end headset market. HTC's $800 Vive headset is due out April 5th. Sony's $400 PlayStation VR was delayed to October, and we'll see what Apple launches. It was just last week awarded a patent for a VR headset. Facebook's Rift has a head start, but its market is limited by the fact that most PCs won't work with it or HTC's headset, unless they're fairly new and equipped for hardcore gaming. But the PC gaming market was worth $28 billion last year, according to DFC Intelligence, and DigiCapital projects the total augmented and virtual reality market will reach $150 billion by the year 2020.
We shouldn't get ahead of our expectations in thinking this is going to be under every Christmas tree at the holidays. I don't think it's going to be that big that fast. 3 to 5 years, it's massive.
And Oculus aims to create a new market that goes far beyond gaming.
Facebook and Mark Zuckerberg's intention here is to make those social experiences, combining your social network of friends and family with those experiences, whether it be games or something else.
And analysts seem optimistic that Facebook will make its $2 billion acquisition of Oculus 2 years ago pay off. The question is just how much prices will have to fall before these headsets can really become mainstream. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Coming up, new retirement rules are likely coming soon, and they could affect your savings. The governor of Georgia today vetoed a bill that was denounced by major companies, Hollywood studios, sports leagues. As we reported last week, the bill would have given faith-based organizations in that state more leeway to deny services to gay, lesbian, bisexual, and transgender people. Disney and Marvel had threatened to stop film production in Georgia if the bill was signed into law. Apple, Comcast, Time Warner, and others also urged the governor to veto the legislation.
And a controversial law in North Carolina has prompted a federal lawsuit. The American Civil Liberties Union and other advocacy groups filed a suit against the governor and other state officials, alleging a new law discriminates against lesbian, gay, bisexual, and transgender communities. And as we reported, that legislation was opposed by numerous companies, including Facebook and Microsoft, Apple, IBM, American Airlines, among others.
A new rule expected to be finalized soon by the Department of Labor may impact millions of investors with retirement accounts. As we've reported, the proposed rule will require financial advisors to put their clients' best interest ahead of their own. The rule would also impact money that is in a 401k that could be rolled over into an individual retirement account. Sharon Epperson is looking into some of these changes. Sharon, this is a fiduciary standard. It is a very technical term and a very controversial one. How would this affect IRAs and 401ks?
It is a very controversial term, but simply put, it is that conflict of interest rule as you laid out, to put your best interests ahead of making their own profits. And how it works for a retirement account, that is what the Labor Department is looking at. Any IRA, which includes money that might be rolled over from a 401k to an IRA could be impacted. And this is significant because so many people, when it comes time to retire or they switch jobs, they move that money to an IRA. Many financial professionals want you to do that because they want to advise you on that money. And some of them are getting hefty commissions when you do that. So if they're following that suitability standard, all they have to do is recommend something that's suitable and meets your needs. If they're not a fiduciary, then that is what the Labor Department says could be a problem and could result in a conflict of interest that costs you money.
And we're talking about a lot of money here. You listed $24 trillion in retirement assets out there. Is a significant portion of that IRA money?
$7.3 trillion is IRA money.
That's a lot of money.
Is more. That's a lot of money, and that is more than 401k money. It is, it pales in comparison to those who still are fortunate enough to have pensions out there, and there are annuities that make up the rest of the pie. But it is a significant amount of money. But what's even more significant is how much that money is growing in terms of baby boomers rolling over their money from a 401k to an IRA, and we've seen the growth of that grow nearly 60% since 2010. We're now at about $439 billion. That's projected amount for 2016, according to Cerulli Associates.
Some people take their pension payments as a lump sum as well, and then they would put that into an IRA.
Exactly.
Could this fiduciary standard slow the growth of 401k, of IRA assets?
Well, it could slow the growth of some of those rollovers is the concern of many in the financial industry who are against this rule. They're saying that for small investors, the amount of cost and the amount of paperwork in terms of the regulatory paperwork that they'll have to overcome to do this is going to make them want to stop doing it for the small investor. If it's less than $50,000, less than $10,000, why would they want to bother? But what many are saying who have researched this, like Cerulli Associates, if you're a big firm, you've already kind of dealt with this and you knew this was coming. And so if they have a big financial advisor base, they're already prepared for this, and they're going to create products that are more fee-based than commission-based.
All right, Sharon, thanks very much.
Sure.
Sharon Epperson reporting.
And on that note, that is it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Mathisen. Have a great evening, everybody. We'll see you tomorrow.